Hello, I'm Jennifer Gladstone, host of our series, America's Retirement Future. Public pension funds look to maximize investment returns for their members, and private equity is proving to be a key investment strategy. Joining us to discuss this topic is Craig Husting, Chief Investment Officer for the Public School and Education Employee Retirement Systems of Missouri. Hi, Craig. Welcome to the program.
Thank you, Jennifer. Really appreciate the opportunity to talk about a retirement system with you today.
So the Public School and Education Employee Retirement Systems of Missouri managed more than $51.3 billion in 2020. Can you tell our audience more about the mission of your fund?
Yeah, I think the first thing to think about is the contribution rate for our systems, the money that goes into the system to support benefits, essentially. So that's equally split between our members and our school districts, which is somewhat unusual in the public pension plan world. So again, our teachers and our school districts equally contribute into the retirement system, which makes our investment earnings very important to both those entities. So with that as a backdrop, our primary mission is to provide retirement security to Missouri's educators, both school employees and school teachers, after a full career of service. The secondary mission is really to allow school districts to attract and retain the very best and brightest school teachers and school employees that they can find. And they can do that by having the background of a very solid and financially secure retirement system.
How many school teachers and public servants in Missouri depend on returns generated by your fund to maximize those hard-earned retirements?
So we have about 280,000 total members. If you look at the retirees, about 65,000 of that 280 are public school teacher retirees in our system. We also have about another 35,000 that are support staff retirees in our system. So in total, about 100,000 retirees. If you look at the last fiscal year, we paid out about $3.1 billion in benefits to those members.
Your organization's private equity investments generated over 14% 10-year return after fees in 2020, which was the sixth highest return of any public pension fund. How exactly have these private equity investments benefited public servants across Missouri?
Sure. Well, as I talked about earlier, Jennifer, we are a cost-sharing program. Again, that means that our employees and our school districts contribute equally into the systems. So again, all of our returns impact those contributions very directly. We also have a cost of living increase built in that our retirees can earn after several years of service. And so the cost of living increase is really also impacted by how much we earn in the investment program. So two very important things. If you look at our total earnings after fees and expenses in private equity since the inception of our program in 2003, it's now $4.9 billion. And that's $4.9 billion net of all fees and expenses and private equity earnings. If we would have taken that same money and invested it in the U.S. stock market and the international stock market over the same time frame, we would have earned about $2.5 billion less in total investment earnings. So again, that's money directly that comes out of the pockets of our teachers and our school districts. And again, without the investment in private equity, we'd have $2.5 billion less in our retirement system today.
Are there any misconceptions about private equity that you'd like to correct for your beneficiaries and the public at large?
Sure. I think there's three primary misconceptions. One is that fees are very high and that the fees are not tracked appropriately. So I will say the fees are high. We do pay both a asset-based fee based on how much we have invested in private equity. We also pay a performance-based fee depending on how well those private equity funds do. And the fees, as I said, are high, but they're all tracked. We track every fee that goes out the door to private equity managers over time. We can tell you by partnership how much we've invested with each private equity group on an annual basis or quarterly basis. We can break it down anyway. So we do track those very aggressively, as do most large public plan investors of private equity in the country today. I think the second misconception is that private equity returns, investment returns, are no different than if you invested in the U.S. stock market. So that may be the case for very small investors with limited staff and limited capability to invest with some of the best private equity investors out there. But certainly for larger investors, larger institutional investors with significant staff and with the access to appropriate consultants, the returns have proven to be much better than what you could also earn in the U.S. stock market. For example, over the last 10 years, our private equity portfolio has earned about 3.7% better on an annualized basis than what we could have earned in the U.S. or in non-U.S. stock markets. So significant difference there. And I think the last misconception is probably transparency. I think many people think there's very little transparency when you invest in a private equity fund, and that's just not the case, especially for larger investors. We get full transparency and a full look through into everything the private equity fund is doing, which gives us comfort from an investment standpoint.
Is your investment team active with private equity co-investments, and what's the benefit to your systems?
Sure, we started a private equity co-investment program about 5 years ago. And so most private equity funds are set up with a general partner who then invests in individual private equity companies. So that's how we access most of the private equity investments, as do other institutional investors. We also have the ability for the general partner to come to us and say, we've got one private equity company we like. We're looking for more capital to invest with this private equity company. And so we're allowed to invest alongside to co-invest with that private equity general partner. The major benefit for institutional investors such as ourselves is that we can invest that way with no fees. So there's no base fee, there's no performance-based fee, and that allows our capital to compound more rapidly, and it results in tremendous fee savings, which really goes to the bottom line to help our members. We anticipate that over 10 years, the total fee savings from the private equity co-investment program will be about $500 million for our system.
Fantastic. Well, Craig, thank you so much for speaking with us today.
Thank you, Jennifer. Really appreciate the opportunity to talk about what we do with your program today.
And I hope you'll all join us next time for our series, America's Retirement Future.